China releases its third quarter economic data following a series of stimulus measures to boost the housing sector and consumer spending. We'll discuss what it all means for China and the global economy. Hello, I'm Anand Naidu and this is The Heat. China's gross domestic product grew by 4.8% year-on-year and 4.6% in the third quarter, according to data released by the National Bureau of Statistics. Beijing says the growth amid external challenges and domestic restructuring highlights the resilience of the Chinese economy. We begin our coverage with this report from CGTN's Chao Feng in Beijing.
According to data released by China's National Bureau of Statistics, the country's GDP increased 4.8% year-on-year in the first 3 quarters of 2024. At the beginning of the year, China set an annual GDP growth target of around 5%. This means the pressure is now on the fourth quarter to reach that annual target. But the National Bureau of Statistics says that GDP growth so far is within the expectations of the Chinese government.
Overall, in the first 3 quarters, the national economy operated steadily with progress. The overall GDP growth was 4.8%, with a year-on-year growth of 5.3% in the first quarter, 4.7% in the second quarter, and 4.6% in the third quarter. These indicators did not fluctuate significantly and remain close to the expected targets.
Positive numbers have been seen across various sectors, including a year-on-year increase of 5.8% for China's industrial output, a growth of 3.3% for retail sales of consumer goods, and a decline of 0.2% in the urban unemployment rate. But the real estate sector continues to go down, with total sales of newly built commercial buildings falling 22.7%. However, the amount of decline has narrowed in the first 8 months. The Bureau says we might be seeing better economic performances in the future, especially after a slew of economic policies were released in September to bolster the economy.
In late September, following an important meeting of the Central Politburo, a package of policies was accelerated. These policies significantly boosted market confidence, changed operators' expectations, and revitalized the market. The main indicator data from September shows that the economy has experienced positive changes.
The National Bureau of Statistics says that the effects of different policies are starting to be felt and the economy is steadily progressing, but it also acknowledged that the foundation for sound economic growth still needs to be strengthened. Chao Feng, CGTN, Beijing.
For more now on China's economy, let's bring in our panelists. Joining us from Portland, Oregon is Liang. She's a chair professor of economics at Willamette University. Also with us from Kunshan, Quelch is executive vice chancellor of Duke Kunshan University. From Beijing, Qiang is the assistant director of the International Monetary Institute. And Gong is a professor of economics at the University of International Business and Economics, also joining us from Beijing. Thanks to all of you for being with us. Gong, let me start with you, and let's start with that headline number, 4.6% in the third quarter. China says that number in the third quarter demonstrates the resilience of the Chinese economy at a time when it is facing formidable challenges. What's your assessment?
Well, my understanding is that it's at least better than the market expectation. I think, I was told that the market was expecting something even worse than that. I mean, this is actually not news at all. We know that China's economy is experiencing tremendous challenges. Otherwise, there wouldn't have been no massive stimulus package just announced, I think, about 2 weeks ago. And I think it mostly coming from the real estate market was, horribly slowing down. This sector has a spillover effect on other things. A lot of local governments' debt is related to the real estate developed market. As a result, they are contracting, they're cutting back, they're trying to find ways to increase revenues. The tax revenues is also substantially adversely affected. So these are, mostly challenges. And I would say that 4.6% is still showing a growth, though. Compared to the previous quarter, it's still a 0.9% growth. So, that's probably the good news out of the not so anemic growth figure that we're seeing. The third quarter, being less growth than the second quarter. But at least I think as a result of this massive stimulus package just announced, as I mentioned, I think we are probably hitting the bottom. And in the fourth quarter of this year, things probably will turn around. And I think, if you look at the 4.8 number, which is the first 3 quarters so far, it's actually not that far away from the about 5% growth target the government has announced previously. So I think we're okay. I think we are probably going to achieve that goal. But I just want to emphasize that China's economy is still facing tremendous challenges at this point.
Right, and John, given the performances that you referred to in the first 3 quarters, are you pretty confident that target 5% will be met?
Well, even if we maintain the same, pretty much the same growth figure in the last quarter, we're probably still talking about, around about 4.8. I mean, 4.8 is still about 5% growth. I'm pretty confident that the fourth quarter is at least going to be as good as the third quarter as a result of this massive stimulus package that just announced. So I think we are still very much on target towards that about 5% goal. But I'm pretty sure that when we talk about 5%, it's going to be a little bit less than 5%. I think the possibility of a little bit more than 5% is probably gone at this point.
Yeah, it may be a little bit less than 5%. John Quelch, in fact, Goldman Sachs raised its economic forecast for China this week, forecasting that Chinese GDP will grow or expand to 4.9%, that's under 5%, in 2024 and 4.7% in 2025. I mean, what are your views on Friday's numbers and these assessments from Goldman Sachs? Hi, John, can you hear me?
Yes, I can. Sorry, Anand. I think Goldman Sachs has correctly revised its numbers upwards in response to the package. It's interesting that the stimulus package was originally, I think, conceived of likely to be around 5 trillion yuan, but then became 7+ trillion yuan, and then maybe even has reached collectively across all of the measures 10 trillion yuan. So
we have lost John. We'll try to get back to him. Liang, let me come to you. The government also announced additional stimulus measures this week to stabilize the real estate market. We've been talking a lot about that already, including reducing mortgage rates and also down payment requirements. What are the biggest challenges when it comes to the real estate market?
Yeah, good to talk to you, Anand. So you're right. I think, first of all, let me just preface, the discussion here about China's economy. Again, we know that China has made a pivot and it tries to, really control the real estate market speculation and overheating, in terms of speculation. So I think it's a very difficult period for this pivot to happen. And so I think to achieve that about 5% growth target, right now, it seems very well within the reach, right? So to arrive at the 5%, the last quarter needs to grow at about 5.6 or 5.9%. And I think with all the stimulus, it's not a very, challenging target at this point. Now, when it comes to the real estate, I think the difficulties are going to be long term. There are 2 major issues right now. One has to do with the unfinished housing projects. Again, that's everybody's wild guess, but somewhere between 20 million to 48 million of unfinished housing. So that needs to be completed for consumers to come back to the market and have the confidence to buy more houses, right? Because no one wants to make the prepayment and not receive the house. The second major problem has to do with the inventory, the housing inventory. So again, there are so many different estimates out there, but some of the upper level of estimate would put the number to about $7 trillion worth of inventory that needs to be get rid of. So I think those are the major issues. Those are the reasons why the real estate market continue to see price decline and also sell decline. That said, I think right now the government's intention is really to try to stabilize the market, right? Instead of going back to have the real estate-led growth. So to that extent, I think they have been successfully reduce the importance of the real estate investment in China and really increase the importance of investments in high-tech manufacturing, for example. But still, the real estate sector needs to be stabilized. And that's why we're seeing the slew of policies that you mentioned trying to stabilize the market.
Right, and Liang, there have also been efforts by the government to create government-subsidized housing. Here's the Chinese Minister of Housing and Urban Rural Development, Ni Hong. Let's listen to him.
为了适应生育2孩以上家庭的需要。
To meet the needs of families with 2 or more children, we have urged and supported local governments to increase the eligibility for government-subsidized homes based on their specific circumstances. In accordance with local conditions, the authorities in various cities should refine the real estate policies while upholding the bottom line and increasing the supply of government-subsidized houses. By the end of this year, we will be able to provide government-subsidized homes for 4.5 million young people and new urban residents.
So, Liang, what do you make of those goals?
Right. I think this is absolutely sensible policy because, again, there are all this inventory that is existing in the market. And at the same time, there are people who are relatively low income or they are migrant workers who need this kind of affordable housing. So I think it makes a lot of sense for the government to either, have that lending facility to allow local governments to purchase this real estate and turn them into social housing, or directly allow the local governments to issue their own bonds and use the revenues to purchase social housing. So I think this is a great policy. I think the problem right now is still the scale is too small. And also, if this financing burden is put on the local government's shoulder, it would be difficult for them because they are having, really much cash strapped. So central government needs to be, doing more and provide the funding for the social housing purchases.
All right, before I move on, Liang, I just want to get your view on the one number we heard in our report there at the beginning of the show, and that was commercial real estate sales going down by 22%.
Right. Again, this is not surprising, right? Because when people are expecting the real estate market is going to continue to go downhill, there will be no demand. So it's both for, consumers in terms of their residency, but also in terms of other types of real estate. It's just that expectation needs to be readjusted, right, and reversed for the buyers to enter the market again.
Qiang, great to see you again. The government also allocated more than $21 billion in ultra long-term special treasury bonds in August. That's to support trade-in deals for consumer goods. How has this policy impacted things like home appliances as well as cars, automobiles? Has there been a consumer boost?
Oh yes, indeed. And actually, I'm planning to buy a new TV and also to some other auxiliaries on my cars as well. Actually, the government is pushing forward this trade-in policies really, firmly. And I think you can get probably more than 20% or 30% of subsidies over the things you're purchasing. And according to my observation and investigation to the rail side, I found many people are trying to make their plans of, buying house appliances and, EVs, as well as for some other small things. And even for the service consumptions, like going to the catering services or hospitality services, and probably during these, we're welcoming the Double 11 shopping festival online. This is pretty much a very important deal at the end of the year. So this is probably going to boost the whole sales of the Double 11 shopping festival by 20%. That's my estimation according to my model, comparing to the last year when we did not have this kind of the boost package. And also, These national holiday 7 days has already been seen the effect of the government stimulus package. And also we're going to be very, very soon to welcome the Christmas festival as well as for the New Year celebration. So I think the end of the Q4 will be a major shopping frenzy. So I think 5.2% of the GDP target at the Q4, and together the 5% of the GDP growth target of the whole year may not be a problem. So I think this package can be some real deal.
Right, and that Double 11 festival that you talk about, the Qiang, is that similar to the Black Friday thing that's held here in the United States?
Oh yes, quite indeed. It's much more like a Black Friday, but with a bigger size and more of the discount coming on. It used to be a national holiday online for shopping. It used to generate more than like hundreds of billions of the sales online. Major boost of the end of the year shopping frenzy. And last year can be a little bit frustrating, and even the major giants of the e-commerce did not release the data because I think the data is not very good to look at. But I think this year the whole things can be changed or at least improved comparing to the last year because many policies is on the way, and I think the government, from the central government to the local government, they're all preparing to use this opportunity as a leverage to boost the domestic shopping. So we're really looking forward to see the data of this double November or Double 11 shopping festival.
Right. John Gong, exports are considered one of the top 3 drivers for economic growth. China's foreign trade reached $4.57 trillion on year-on-year, growing 5.3%. That's a record. It was helped in some ways by a decline in commodity prices, but it was also hindered in other ways because we still see these trade barriers, including tariffs, that are there. What effect will they have on growth?
Well, the export sector has been the bright spot so far. It has been always been surprising people expectation. It's great to see that China's resilience in the export sector, the competitiveness of its companies and products, that's all good news. But I'm afraid that, as you said, we're probably running to a war of protectionism. I think these policies coming from Washington and European Union, the fact of these policies sooner or later probably going to show in the statistics. It may take some time, but I think we're not going to see this kind of a growth in as we've been seeing in the past. Even though, as I said, Chinese products overseas are still very much welcome and very competitive. But the fact of the matter is the export sector only still accounts for less than 15% of China's GDP. Yeah. So no matter how well it performs, it's only going to have a limited impact on the overall economy. I think we still have to go back and look at why consumption is not increasing as we hope, and look at why the overall consumption, the impact of the local governments cutting back, and hopefully this central government debt bailing out local governments going to take its effect sooner or later. These are probably more driving forces of China's economy, in my view. Now, regarding consumption, I have a little bit of a theory that the structural changes in the economy, in the consumption, that it's actually not being captured by National Statistics Bureau's calculation. I just give you my own example. These days I don't go to grocery stores anymore. I buy everything online. Now I'm not actually cutting back, but I look at my expenditures sort of informally. What I've been seeing is that I'm actually saving a lot of money. So probably as reflected at the Statistics Bureau, they're seeing that I'm actually cutting back on expenditures, right? But the point is that I'm actually not buying less. I'm just buying things probably even more, but at a much reduced overall expenditures. So I think this is a structural change that need to be captured. Yeah. A lot of people actually are doing things like what I'm doing. Right. The fundamental change introduced by the electronic commerce, it's just making this market way more efficient, and way more, less expensive for consumers. I think, this is probably something we haven't seen before.
Okay. Well, I'm glad to report that John Quelch is back with us. John, great to see you again. You were talking about Goldman Sachs, which raised its economic forecast for China this week, forecasting GDP growth in 2024 will be 4.9%, and that goes to 4.7% in 2025. And I was just wondering if you could finish your thoughts on that.
Thanks, and apologies for the connection. So one key point, I think, is that
still having a problem with John.
That in any Western country, achieving 5% economic growth in the current environment would be regarded as a miracle. Obviously, Europe is in poor shape, and the United States around about 3% GDP growth at its maximum. So I think in addition to that, Chinese people have been used to year-on-year outstanding economic performance for so long that it becomes a bit of a drain on confidence when you get only 5% economic growth. Yeah. So I think these points are very significant and have to be taken into account by the Chinese consumer. Chinese consumers are doing extremely well relative to the rest of the world. As John pointed out, there are improvements in efficiency and innovation in Chinese manufacturing and Chinese delivery of sales to retail consumers. And these efficiencies may not show up in terms of top-line economic growth, but are actually occurring in the economy and making the economy more resilient. The one caveat I would suggest is that with respect to the stimulus for automobile purchases, appliance purchases, these kind of stimuli are drawing sales forward. So you do get a one-time acceleration boost in terms of the timing of sales expenditures, but actually you pay for it potentially on the other side. And we have to be a little bit careful that the stimulus measures that are being implemented are not simply drawing demand forward.
Yang Liang, CGTN spoke with Thomas Fang. He's the head of China Global Markets with the investment bank UBS. And we asked him for his views on the Chinese economy. This is some of what he told us. Let's watch.
Our lobbying point is China should stimulate as early as possible and also as much as possible. We are very glad to see the policy pivot. So to me, this is the whatever it takes moment for Chinese policymakers, and then they're focusing on obviously growth and financial market performance, property market, and all the key numbers for the economy.
So Yang Liang, yes, Thomas Fang telling us there, as far as the stimulus is concerned, as early as possible, as much as possible. Last September, China pledged to open its doors a little bit wider to foreign investment. How much of an incentive is that?
Right. So we already see that, foreign capital coming into the stock market due to the recent stimulus. But of course, a lot of them are still in terms of the, investment horizons during the short term. So I think, going forward, what would attract foreign investors, one has to do with the stable market and also the long-term growth and also that technological innovation-driven economy going forward. I think those remain to be very attractive for foreign, especially long-term investors. And I also just want to echo back to the two Johns that I agree with them. I think, China has achieved so much efficiency gain without the monopolist pricing power. We're seeing that translate into, affordable consumer goods prices and enhanced consumer welfare. And there's also a lot of subsidized consumption in China. So I do agree some of the stats don't capture that very well. And I also agree the direct stimulus of consumption is hard to do, right? Consumer coupon can simply, make consumers buy now and buy later less. So I think, yes, we need to continue to sort of stimulate the economy, but at the same time, embark on those long-term structural reforms.
Qiang, the administrator of the United Nations Development Program, Akim Steiner, he's just finished a week-long visit to China. In an interview with CGTN, Steiner discussed China's economic prospects in the face of these global disruptions that we've been talking about. Let's listen to him.
Many countries at the moment, including China, are going through a period where disruption and shocks are more pronounced than maybe in the 10 years before. Some of those have to do with bilateral relations, some would have to do with economic disruptions, the financial crisis, the debt crisis. All of these have affected our overall economic progress, and that inevitably is reflected in domestic policies and also sometimes dilemmas. Now, China is still in a, I think, very privileged position from the point of view that it is such a large economy. It can absorb some of these shocks. Having said that, I think particularly in this moment of economic uncertainty, the policy decisions of government matter a great deal.
So, Qiang, how do you see China's latest stimulus? I mean, is more action needed?
Well, yes, indeed, Anand. I think we do need to do more things, and according to what we can see for happening, according to the current stimulus package. Well, I'm myself a advisor for the UNTB China for a while, so I'm very familiar with the point of Mr. Steiner. And I think, yes, we've been seeing these combos coming out early in October. Well, China currently have its own rhythm of the stimulus package or policy combos. So, well, usually you've been waiting for it, and then when you finally see it, it's going to be like a boom. It's going to be really massive. It's going to be really impactful, and this is what we've been seeing right now. And if you think the beginning package is not enough, and then it's going to keep it coming until we see everyone see the effect we're expected. So this is how China are pushing forward the policy in all aspects. And I think currently this beginning package has already been a financial and fiscal bazooka. And we don't think it is quite enough after we see the release of the central bank's information. And then NDRC comes, and then Ministry of Finance has come, and then the State Council representative is coming. And just to take a look, this is still not yet. And we're going to see more of these packages coming out. For example, the Ministry of the Housing is also going to release the further of the details of the policy, and also we're going to see more of the local government that will follow the central government's leadership and policies, and to release the detailed local government policies at the end of this year, and also in the next year, at the beginning of the year, we're going to see more of the plans been endorsed on the National People's Congress, and also in the March of the next year, we're going to see more of the ministries.
Right.
According to the National People's Congress, we're going to have more of the policy. So this is going to be a slew of the policies in the next half a year, and a major booster for the economy in the longer run.
Okay, and that is where we have to leave it. Thank you to all of you for being with us. That's it for this edition of The Heat. I'm Anand Naidu in Washington, D.C.